Hi everyone, welcome to FOREX TRADING EMPIRE YouTube channel. In this video, I'll be trying to explain CRT in 10 minutes. I'll be trying to explain what makes a CRT a high probability CRT in this video. Try to tell you and try to show you when to look for a high probability and when you'll be expecting a high probability CRT. Because I've talked about CRT a lot, and if you don't know what's a CRT, there'll be a video popping up and you click to the video on what is CRT to understand more on what is CRT. Before I start, make sure to like and subscribe to the YouTube channel. So the trade we'll be talking about in this video was explained in the FOREX Trading Empire Discord community. And if you're interested to join the Discord community, it's absolutely free. The trade was discussed in the chat room and it's absolutely free to have access to the chat room and live trading section. So join the community today to have free access, and the link is been linked in the description below to have access to our trade idea and live trading section. So what makes a CRT a high probability CRT? Now I'm on the weekly chart of Euro USD, and this was a weekly bias. We used the CRT to identify a weekly bias, and I'll be discussing on how we went through the whole discussion in the Discord community. First, you need to understand that what makes a CRT a high probability CRT is that CRT is a pattern. So if you understand that CRT is a pattern, and you know that you can't trade pattern for pattern's sake, you need to have a narrative attached with the pattern to make it a high probability setup. So that's one of the major idea which has been discussed in the community, is that we don't trade pattern for pattern's sake. And understanding that if we are not trading the CRT pattern for pattern's sake is to understand that we are looking for other narrative that aligns with the CRT bias. So last week we saw the price traded to this weekly fair value gap, and price traded to the weekly fair value gap. The week the price traded to the weekly fair value gap, price did a retracement back to the candle range, which made it a CRT high, which made it a CRT candle. We all know about a CRT. If you don't know what's a CRT, check on the YouTube channel to know what's a CRT. The price traded back to the range of the CRT candle and closed inside the range of the CRT candle. Now, seeing the price is reacting from this fair value gap and seeing a CRT indicating a down close candle and price reacting from this fair value gap, now you already have a narrative to this setup, anticipating price to go for the CRT low and even go lower for the sell side liquidity. So having a narrative to have a high probability setup is one of the major facts. Now, seeing the price run out the CRT high, traded back to the range, we started stripping down to the 4-hour time frame, started looking for entry, which you can look for an entry directly from the 4-hour time frame, but we attach it with section. And to understand how we trade the weekly bias or a weekly CRT bias through section, you just need to join the FOREX Trading Empire community, which the link has been linked in the description below, and join the private mentorship program to have access to learn on how we align a CRT bias to trade on section like the London section and the New York section. So I'll be talking on the 4-hour trade and trading lower throughout last week, which was discussed in the free live chat room and the live section. So let's go down to the 4-hour time frame. For those in the FOREX Trading Empire community, they noticed that last week I pointed out that once price opened last week, here was the opening price of last week. Price opened, here's the opening price. As soon as price opened, price traded to a 4-hour fair value gap after the run on the buy side liquidity. After price run out the CRT high, you can see a shift in market structure with this impulsive candle. Now, last week weekly candle opened, price traded to this order block, and I sent a screenshot explaining that I'm looking for price to respect this order block, trading lower. There's a fair value gap within the order block, a little fair value gap. If you go to the 1 hour, you'll see a big fair value gap. But my attention was at this order block. Same price, we're expecting this order block trading lower. And I explained that I'm looking for price to go for the previous week low, which is the sell side liquidity. And this would have been a nice trade setup on a swing trade perspective, but we still use this bias for daily bias if you know how to align it correctly, and which is explained in the private mentorship. And if you want to have access to the private mentorship, the link has been linked in the description below. You can chat me up directly from my Telegram profile, which the link is in the description below. So price respected the order block, traded lower, run out the sell side liquidity, traded lower. After a trade lower, we are still anticipating for lower prices. Price retraced back to this fair value gap, still traded lower. On a CRT, we're anticipating price will run on the CRT high, leading to the CRT low. And here's the CRT low. Even this week, we are still anticipating lower prices for price to trade lower to the CRT low. Price traded lower, did a retracement. We're expecting order block, traded lower to till price run out the sell side liquidity, which was our target for last week. And on lower time frame, we took advantage multiple times from the 1 hour time frame after the trade to the order block and a trade to this fair value gap, which was explained in the live free section on how price traded to the sell side liquidity. So understanding when there's a high probability setup, understanding when there's a high probability CRT is when a CRT is at a reference point. A reference point is running a buy side liquidity, running a sell side liquidity, or inside a fair value gap, which in this weekly example, price was inside a weekly fair value gap. If price was running a buy side liquidity and I identify a CRT or trading to an order block and I identify a CRT, it makes it a high probability CRT. Now, if I were to zoom closer to the time price run out this sell side liquidity and seeing a CRT at the swing low, you can see the CRT low. Here's the CRT low. Price run out the CRT low, running out is a higher time frame sell side liquidity. Now, this is a high probability. Price traded through a reference point and there is a CRT formation. So that's why we don't trade pattern for pattern's sake. And your target will be the CRT high. For price to trade to the CRT high. And this is on a 4-hour time frame. This is not even on a daily time frame. You can still use the CRT with understanding the reference point, which I've talked about it. We explained on all the reference points we're looking for price to respect when using a CRT as your bias to determine your bias. It's been explained in the private mentorship program. So understanding that price trading to a reference point and identifying a CRT to make it a high probability is one of the major factors to trade a CRT formation. So understanding a high probability CRT is understanding the reference point. So that's all for this video. See you guys in the next video.